Ramesh, talk about the fact that Berkshire Hathaway was not an investment company at the start. It was a textile company that he bought.
It was, as you say correctly, one of those cigar butts that he found.
Yeah.
He thought it was so cheap that he could, flip it. The owner, I think, was going to be doing buybacks, so Buffett thought he'd make 10-15% profit. So he bought that company. And when he bought a sufficient stake, he went to meet management. And management said, okay, we'll make an offer for, say, $15.38 dollar for the share. And instead of doing 3/8, he did it for a quarter. So he ripped Buffett off the 1/8.
Yeah.
Buffett was so angry that he kept buying the company. He said, I won't tender, I'll take over the company. And lo and behold, in the 60s, he took over that company. And that became Berkshire Hathaway partnership in the 70s or something like that. And the textile business was ultimately closed down because it was a failing business. It had nowhere to go. It just guzzled capital. But sometimes good things come out of bad decisions. And thanks to us, the investors, he created a conglomerate. It was not the most tax efficient way, not necessarily the best way to promote a partnership. But anyway, it was done, and that's history. And that's become what we call Berkshire Hathaway, one of the most formidable conglomerates in America. I think Buffett has said once that if there were 25 other companies like Berkshire Hathaway, no one else would have to pay income tax in corporate America. The kind of taxes they pay, the kind of people they employ, the kind of market cap they have. I think the market cap is probably richer than the entire Indian stock market perhaps at this time.
And what strikes me off late also about Berkshire Hathaway as it stands right now, a lot has been said. The headlines, people have probably read it, the amount of cash that they're currently holding, which just reinforces Warren Buffett's philosophy about buying businesses when the value is right. But it takes gumption, Ramesh.
It does, and he's done that multiple times, though he's always said just remain invested. Our favorite holding period is forever.
Yeah.
But he tends to kind of skirt it sometimes because he has such deep insights into American valuations. So for example, I think it was in the mid-70s, 73, 74, he made an all-cash outlook. So he had a partnership, he liquidated his partnership, and he returned the cash to the shareholders, saying, I can't find value in the stock market anymore. And a few years after that, the market collapsed from the 73 to 79 bear market that took place in America. The bull market resumed a decade later in 1982. So that was one of the famous cash calls he made. This time he's been warning of a slowdown in America, and he sold Apple, which was obviously his biggest holding, and raised this amount of cash corresponding to that. But as he said in his last AGM, in his last statement, he remains perennially bullish on America. He thinks America's economy is always going to do well. But as you said, that he's looking for the right value, when to step in and buy. So I think his gun is loaded. He's still looking for an opportunity.